working on probably 5 or 6, but we'll probably have 2 or 3. You know, we insist on opening up the country, which is a big deal.
So I think the key aspect of Robeco is that we're a very focused asset manager. We are a third party, and we have certain areas of strengths, like in quantitative, emerging markets, and in credit. So I think we're very focused on what we do. We're very good at what we do, and we don't try and be all things to all people. My goals are to generate the best risk-adjusted returns I can for my clients. So I think the start of this year was a very interesting one. We saw that big drawdown in the US in April, and that raised a lot of concerns, and then we've seen a rebound. So net, not a lot has sort of changed. But we've also seen a lot of challenges come, whether that's been inflation, conflict in the Middle East, tariffs, and geopolitics in general. And I think the takeaway from all this is that we're having to learn to live with a greater level of uncertainty, and that's not going away anytime soon. And more interestingly is for the first time in a decade that exceptionalism around the US is starting to be brought into question. And I think that's leading to a lot of people think about their diversification options for their investments. With energy transition, I think that's something that we'd been going through for some time. The climate sort of objectives have seen that sort of move to more sustainable and renewable energy. I think what's added to that more recently has been the incredible energy intensity from AI. So we've seen certain countries where they thought they were having a peaking out in energy consumption, reassessing that. It's seen a drive to sort of certain aspects like nuclear energy, which had sort of been on the back burner for a period of time. So a lot of changes happening there, and that has been, for example, the move in nuclear has been of benefit to places like Korea. Defence spending, again, has been one of those things that had been a bit of a taboo subject, but with some of the changes that are happening we're starting to see some resurgence in that, particularly in Europe, where that's starting to pick up, and in parts of Asia as well. Again, it's been interesting from a Korean equity market perspective with some of the defence plays in the market. Yeah, absolutely. I think one of the biggest changes we've had over this year is the concern around aspects of the US, the high valuation, the dollar as a reserve currency, and the over allocation into the market. So I think that's resulting in people starting to look for what are the other options. And I think Asia is quite a big standout here because there are a lot of different opportunities. You've got great growth opportunities in India and ASEAN. You've got great turnaround opportunities for the likes of China. And then you also have, in a weaker market environment, this sort of more focus on shareholder returns, dividends and buybacks that we're seeing in the likes of Korea and Japan. So we think Asia is going to be potentially a big beneficiary of that diversification and flows. Yeah, that's a very tough question. I mean, Taiwan is the, AI play in Asia, led, particularly by the semiconductor industries. If we sort of think about the course of this year, I think there's a number of different things that could play out. So, from an aspect of growth, again, places like ASEAN, particularly the likes of Indonesia, Philippines, Vietnam, etc., are on very, very cheap valuations, quite low expectations. They don't have a lot of exposure to the tariffs, so they could be areas that do very well if markets continue to be quite well bid. On the other end of the spectrum, we have the likes of Korea, where, again, as we sort of touched on, whether that's been defense industries or nuclear industries, new areas are starting to grow that could benefit it, but also changes to things like the Commercial Act, which could see quite a lot of positives coming back from shareholder returns, the likes of buybacks, dividends, and greater capital efficiency. So I think that would be key areas I would keep an eye on. Yeah, I think this is one of those interesting sort of debates around how these things sort of change, and I think the greater the regulation or the lower the free float are the areas that sort of impact those. I do think a number of the changes, like for example, some things around the commercial act sort of else will be positive for the economy. They will be positive for the sort of flows. Things like pre-funding, etc., have started to sort of change within the market as well. So I think this is a process where we're moving in the right direction, and I think that will continue. But trying to guess when the likes of MSCI will exactly pull the trigger on that, I think are quite difficult. Probably a better question for them than for me. Yeah, I think there are a couple of different ways of looking at this. One's driven more around fundamentals and some around some of the changes. So a lot of the holding companies still trade at very, very large discounts. And if we see these improvements in things like the Commercial Act continue to move forward, I think those discounts will continue to close. On more of the fundamental areas, we've seen a lot of areas, whether that's been in, again, electricity grid, nuclear, defence, etc., have done well. And I still think those are going to be quite long-term trends. So I think those are areas that will, continue to do well. There are other areas, whether that's been the likes of pharmaceuticals, etc., which Korea does have some strengths in. A lot of that depends on the global climate, what's happening, changes in supply chains as well. But that could be another area that could be of interest. So I'll take a step back, even away from sort of equities. I think one of the most important things you can learn is diversification is something that's important. Particularly we've had a period of time where people have become very, very focused on singular parts of the market. So one, just make sure you are sufficiently diversified. And then outside of that, I think it's a simple question of look for things that are relatively cheap, where things are starting to get better. For example, if we think about, Korea at the beginning of the year when people were very, very pessimistic, things were very, very cheap and things started to improve. That was a good example. And I think you see a lot of similar things like that, and I think that's a good opportunity. It's very easy to get involved in whatever's the latest sort of fad, but the problem is if you get in too late at expensive valuations, that can be problematic. So that would be, I guess, the best advice I can give for people.